Hello again, everyone. It's This Week in Agribusiness meteorologist Greg Solier. We're in from Max Armstrong. Here's your farm progress Dateline Drought. Well, not a whole lot going on moisture-wise, obviously, over the past couple of days. Pasture lands, summer crops continue to struggle along. Quite an incredible drop in those crop ratings noted earlier on in the week. A little more optimism beginning to show up on some of the weather maps and charts, not only in the short term, taking aim at the end portion of this week and into the weekend, too, in a small, narrow corridor. But they'll take anything they can get. But down the line, while we kind of manufacture a little piece of this hot, high-pressure area over the heartland next week, it's going to be a few degrees cooler up aloft. The ability to generate perhaps some passing clouds, some rain-cooled air up aloft, and maybe from time to time, at least a little more clustered effect of thunderstorm activity. Matter of fact, that infamous ring of fire pattern is expected to play out over the next couple of weeks. We'll take a little more detailed look at that this weekend on This Week in Agribusiness, along with the 4-week outlook. It's time to take a look at that now on a weekly basis. We'll do so right through the balance of this month and in through August. It's critical. There's still some hope of getting a drink or two of water, if you will, over at least parts of the Corn Belt, eastern and southern areas accordingly. And boy, the rain will come on down, by the way, over the next 3 to 4 days over the lower Mississippi Valley. They'll take it across the Tennessee Valley, mid-Atlantic region. I think you'd call it almost drought easing, considering the time of year. Substantial wet weather pattern there, and it's that little finger or tentacle of moisture that will work to the north. And we'll see how it lays out here momentarily with a graphic we put together on where some of the better coverages are expected to do and play heading on through Friday, Saturday, and Sunday, primarily along and south of about the I-70 corridor. In the meantime, as of July 8th, no big surprise here. A lot of the back 40 and winter wheat areas, pasture lands running anywhere from 75 to 80% or more. Poor or very poor across the high plains areas. Same with some impressive, almost depressing numbers coming out of Indiana and Missouri, anywhere from about 80 to 81% there. But again, some optimism that perhaps some late planted varieties might come up with some rainfall. Matter of fact, here it is over the next 3 to 5 days. Signs that some moisture will come out of eastern Texas through Bayou country into areas of the lower Mississippi Valley, Ohio Valley region. Think that maybe some of the rain totals into parts of central Ohio might be a bit overdone. Nonetheless, 1/4 to 3/4 of an inch expected, and areas near the Ohio and southward, including that hard-hit Wabash Valley, may come up with something substantial down the line here over the next 3 to 5 days. That's an update on weather. Here's Bryce Knorr with a look at markets.
Hello, this is Bryce Knorr, Senior Editor of Farm Futures Magazine, with a special Dateline Drought Market Update for Wednesday, July 11th, 2012. USDA released bullish supply and demand reports this morning, cutting inventories of corn, soybeans, and wheat across the board. But on a day of volatile price move, futures sold off sharply after an early move to new highs, only to finish well off session lows with a late round of short covering and bargain hunting. Still, the lower finish created bearish reversals on daily price charts for corn and soybeans in buy the rumor, sell the fact type trading. Somewhat wetter forecasts for Iowa, Illinois, and Wisconsin over the next 5 days triggered caution as traders took profit to wait and see how and if those rains actually develop. 2-week maps are also looking wetter across the I-80 corridor from Nebraska to Ohio, though those outlooks haven't proved very reliable lately. The turn lower today came despite USDA's move to cut its forecast of 2012 corn and soybean production sharply. USDA lowered its yield forecast for corn by 20 bushels per acre to 146, taking 1.8 billion bushels off the crop. Price rationing would lower demand, but USDA still put carryout at 1.2 billion bushels, down 37% from the June projection. USDA reductions in soybeans were also aggressive. The agency lowered its yield projection to 40.5 bushels per acre, down 3.4 BPA nationwide, cutting production by 155 million bushels from earlier estimates, despite a big increase in acreage. USDA lowered its forecast of 2012 crop ending stocks only 10 million bushels to 130 million bushels due to lower crush and exports, but that's still a very tight number that would produce an average cash price of $14 a bushel for the crop. USDA's estimates for both corn and soybeans closely match my projections made from nationwide crop ratings out July 2nd. That means both crops likely have gotten smaller after last week's heat and this week's subsequent drop in ratings. USDA also implied the heat had cut into spring wheat yields, though not as much. Still, the agency lowered its forecast of total wheat production by 10 million bushels, saying improving demand would lower carryout by 30 million bushels to 664 million. Wheat also threatened to reverse lower from new highs, but held key July 4th price gaps to finish firm. September contracts at all three exchanges notched outside days higher on their charts. Keep up with the drought situation across the country by visiting www.datelinedrought.com.